5 years of trading simplified, equity curve growth. Put that investment. As I told you guys how to do this again, like this is the first big turning point, because once I realized this, I was able to take 50 bucks and make 30K in one night, and like, you know, go get a penthouse and all this type of stuff. I was kind of burning through money once I was first learning this type of stuff, but I was able to go live lavishly. Like my whole lifestyle was able to change, because when I was drop shipping and doing business like that, like you may make, you know, 30% profit margin, 70% profit margins, whatever profit margin you make, it's cool. But when you're trading and you're making all profit, it's just all profit. So my whole lifestyle was able to change. I didn't have to hire no one or none of that. I didn't have to ship out no products. I didn't have to do any of that type of stuff. So I was able to just, you know, spend that money. I was just spending money left and right. And it was so much money, I wasn't used to spending this type of money. So I've got all my crazy spending out the way. Now I just kind of invest in properties. But, and, you know, charity and do give back and try to, that's why I'm giving back now, teaching and stuff. Let's see what number, the next thing. So that's the biggest one, risk management. It's like changed my whole trading. My next was, psychology. I'll put psychology. I think that goes with risk management. That was major, but my next turning point for me was, so I hit those big trades, had big nights, and then what was the next giant one? I want to say crypto. Yeah. Crypto being 24/7. So yeah, crypto was the next big one, because stock market is closing at like what, 4 or 5 p.m. Monday through Friday, and then Forex is 5 days a week, 24/7, which was cool. But then crypto was just 24/7 nonstop. So once I started learning how to trade crypto and doing that made me able to trade anytime I want. I can trade from any place. Like I would trade from parties and stuff like that. It's crazy on my phone, but you trade from any place once you learn how to trade crypto. So definitely understanding how to trade crypto is cool. Investing in crypto long term and stuff is like, I rather invest in real estate long term. But if I do see a trade like for a year, if I'm looking at the year chart or something like that, and I see there's a bullish year, like I'll buy in at the bottom of the year and exit. But I always think in terms of trading, like where's my entry and where's my exit, where's my stop loss. Like most investors just buying it, they don't know where their stop loss is, they don't know where their take profit is, and they're just, oh, I'm buying Bitcoin to the moon, I'm gonna hold it for 30 years, and that's a cool style, and that's not a style that I personally understand. Like, but there's people who make money with it, like Warren Buffett, and there's all these people who do that type of stuff. But I'd rather hold like a piece of property for like 30 years than virtual currency and stuff, and stocks and companies, you know. But it's to each your own. There's people who make money doing it, so I'm not saying don't do it and all that type of stuff. Like if you would have bought gold 20 years ago and just rolled the curve, you would have bought Apple 20 years ago and held it, you'd be, you know, super rich today. But I like to have my entries and exits, so I like to, if I'm gonna hold it 20 years, I just want to make sure I know where my exit is. Like I do want to have an exit plan when I go in, and I want to have a stop loss and a take profit. So that's my advice on crypto investing long term. Let's see what the next big point for me was in this journey. It was a crazy journey. Market cycles. Yeah, this right here. And it's like, no one taught this to me. Like I watched all these YouTube, 1,000 hours, paid for courses, did all this type of stuff. No one was teaching this until like my one mentor who got me to where I'm at today. He's the one who explained what market cycles is, and pretty much what market cycles is. Make sure pretty much what market cycles is the market always moves in a cycle, 24/7, never ending cycle, and it just does one thing after the other, and it transitions through cycles in a certain way, and it's always cycle, never ending. So like once you understand that, like you understand, once I understood market cycles, I understood I had to get out at a certain point, I had to take my profit at a certain point. I understand what part of the cycle is in. That's why when you guys see me trade live, like you see, I just open up any chart, I get to understand where it's at in the cycle, what it's doing, what's forming, and then just take my trades based on that. Like all day, every day, any chart, I just can do it over and over and over and over because the cycle is very, very simple. The cycle's only broken down into like it goes through 4 different cycles. So the market's always cycling through 4 different cycles, and it goes over and over. And then in those cycles, it does different patterns and stuff in the cycles. So over here, I go down into detail on all the cycles, and I break them down, show examples. So I definitely recommend doing that if you guys want to step up your market cycle game. But that right there took me to another level in my trading. Was the market cycles. Number 4. Drink some water before I go into tip 4. All right. Number 4, I had to understand too many indicators was bad. So once I understood like too many indicators can overcrowd you and was making your trading accuracy go down, and this is like super advanced. I didn't like this stuff that I've learned from people on Wall Street and stuff like that. But basically I was using all these indicators, and I had like 20 indicators, 30 indicators. I had like a giant list of indicators and all this type of stuff. RSIs, MACDs, watching all these indicator videos on YouTube where like, this is the best indicator, this is the best, every video is the best indicator, and like they're all 90% accurate, 95%. I went through the whole rabbit hole of indicators for like a year straight, maybe more, of just people trying to show me indicator after indicator after indicator. And the people who were doing it, like I always noticed, they wasn't really, I never seen them really slap trades live. They would just go on indicators, like go backwards. That's why I like to hit trades live for you guys, so you guys can see it live play out and stuff, because that alone helped me sort through all the people who were not actual traders. So they're showing you all these indicators and stuff. RSI, use the RSI with the MACD combo, use this with that. And I'm not saying that these indicators are bad, but I would say this: the RSI, MACD, all these indicators are lagging indicators. Lagging meaning that they don't give you an indication until after something already happens. There's some indicators that are not lagging, but like for example, the one I just showed you guys earlier in the video, or I'll just clip it because I don't want to lose this part, but where I use the EMA indicator, the moving average. The moving average is not lagging. That's just an average price. So it's an average price. So it's nothing that's lagging about it. It's very simple, and it's just one indicator. The most indicators I use is 3 at all times. I don't use any more than 3 indicators, and it's really just one indicator, and the other ones are just like when you see in the indicator course, the other ones are just important for understanding where you're at in the chart, where you're at in the cycle. So it's just indicators that let me know stuff like that. But too many indicators, I would just lose all the indicators. Start at a blink chart, trade from a blink chart, and so that leads into my next point. What's my next turning point? I'll have you keep your EMA on so you can know the trend and stuff. But on my live, you're never gonna see me like pull up a RSI and then chart a trade or anything like that. Like you're never ever gonna see that, because it doesn't work. For me, there's probably some RSI master out there, but I don't know. And the bots don't care about RSIs and MACDs. The bots move the market. Firstly, people don't move the markets with RSIs and stuff. There's not someone sitting at a computer with 10 billion, 100 billion, or 10 trillion like BlackRock or something. They're not sitting at a computer with an RSI, and every time the RSI cross, they're dumping in billions of dollars. That's not how it works. So they don't really care about that type of stuff. And then that leads into the next point. What do they care about is price action. Boom. That was the next big turning point for me, was understanding price action. Everything I teach is based around concepts of price action and stuff. I didn't flat out call this the price action course, but pattern mastery, market cycle mastery is all price action. I teach some price action in here. It tends to setups is price action. All the way I use all my charts are all price action based. So I teach price action. I just don't call it straight out a price action course. Maybe I should. But price action was like this cut my trading curve. I may have still been in beginner stages if I didn't learn price action, because basically, like, when you're trading, before trading price action, what was I trading? Like someone was like institutional trading, or what was the names of it? Just indicator trading. There's all this types of trading. There's the ICT dudes. There's the IML guys. There's all these people who teaching all this type of stuff that just wasn't working for me personally. It just wasn't working for me. People have success with it, and that's great. But I found out the only thing that really matters is price action. Let me try to give you an example. Right here, this is a perfect example of price action. This is live trading. I can catch this trade. I should jump into this trade right now. That's why I don't do too much teaching vids, because I like to trade, and I don't want to be in a trade tracking it while I'm teaching. But here's an example of price action. Probably gonna watch this play out live. Right here, they hate this price. I see the price going down 46664 going down. It hit 46600 or near there, and they hated that price. And I've seen the price action close up. So as soon as I see that, I'm like, okay, they hate that price. Got my 50%. And I hit my 3-to-1s. And that's price action live right there. Like, this is probably gonna go farther than that, which is crazy too. But I could even take this up to the top. But like I said, you can get 3-to-1s and be profitable and grow your account. Sometimes I go for the 5s, I go more, but this is price action in a nutshell. That's why I have the average price. This red line is the average price. Right now, it went below the average price. It tried to go lower, and it came back here. I don't know why it came back here. Maybe it can't hold the price on there, so it's trying to find a price up here now, above the average price. So now it went from fair to now they're trying to find a price where they're too greedy, and then they're gonna go back to fair. And that's it. It's very important to understand. Is now I want to just watch this trade hit. Like, that's how it is. But we'll come back. We'll just scroll back over. So that's price action right there, guys. Yeah, I can move that over. Let's go on to the next topic. Let's see. Was another major turning point for me. Scalping. I kind of went over that earlier. Scalping. When I say scalping, it's just 5-minute chart. Learning how to use that was like everything for me, because now I didn't have to sit in trades for a whole day, take a little bit of trades. Like, when you're growing a small account, it's always better to take 20 trades than to take one trade. It's gonna just forever be better to think in terms of longer trades. So in order to take those 20 trades, I had to learn how to scalp effectively and properly. So scalping is amazing, and scalping definitely helped me on my journey. After scalping was swing trades, and that's probably the journey you guys are gonna have to go on. Swing trade on the 4-hour. So now I can go to sleep in a trade, because I would just be trading. I didn't want to go to sleep. My sleep schedule was all messed up, because I really love trading. I'm like really passionate about it. I love it. And now my sleep schedule was messed up. I had to learn how to be sleeping in a trade. That's why the trade you guys saw we hit last night, those 2 trades that we hit, or I think we hit a couple. Those 2 specifically that we hit on the live, those were swing trades. They hit by the next morning. I went to sleep, cut off live, woke up, made the post, showed you guys that we hit our take profits and we're in profit. Like, went to sleep, woke up peacefully, no problem, slept like a baby, and just woke up in profit. That's that. Let me see what else I can teach. What was another? It's probably the final big turning point for me. I had to make a final major turning point. It really took me to that $1 million trading level. I covered equity curve. I don't know if I should. I don't think how to pay yourself is important. You gotta know how to take your money out the market too. But that's like, I don't know if you guys wanna. I'm trying to think what was a major turning point when I crossed. Risk management. I said that. Risk management goes into how to protect your capital, guys. I guess that's my final. To stay above an M and to grow to 2 M's and then 3 M's, you gotta learn how to protect your capital. How to protect capital. And I'm just gonna put that into 9 is when to stop trading. And you gotta know what to do when you lose. So boom. So you gotta know how to protect your capital. What I mean by that, that's so crazy, straight hit to the T. But what I mean by that is how to protect your capital is more now you're up, you have this big account, you're growing it, it's just so giant. Now you're like, you know what, I want to grow faster and faster. Like, I have more money now, I can risk more. You start saying stuff like that, and now you increase your risk without remembering your equity curve and your risk management that we learned, and your account goes back down to 0. Or it goes down drastically. You lose 30% of your account, 40% of your account. You just lose your account because you have more money, you didn't recalculate your risk management, you're not understanding all of that. The math changed up on you, but you didn't prepare to do the new math. And now you're back down where you started. And that happens to a lot of traders. I call it boom and bust. Go up, go down, go up, go down, go up. Too much risk, go down. They throw it. Like, once you start making a lot of money, that's another thing about trading. You start making a lot of money. Money triggers your emotional brain. You just start feeling all these emotions, get hype. You just hype, like, all the time you're hype. That's why I'm like kind of effortless about having money now. It's like, I'm just calm, like, I don't care. I spend it. I've done a lot of stuff with the money. It's cool, but I know to be a good trader, and when I'm in trading mode, I'm in front of these charts, I can't be super emotional. I can't be like throwing money in the air every time I had to trade. And, you know, when I used to trade, I used to do that, but once you cross your mill and you start having money, you can't get super emotional every time you hit a trade. You gotta treat every trade the same, win or lose, and you just follow your equity curve over time. So it's super important. Like, this trade broke out, guys. Like, that's why I'm having trouble talking. Like, I'm watching this trade shoot out, and it's just printing money. But this is price action. This is exactly what we were just talking about, and that's on XRP live. So it's cool to see that type of stuff. How to protect your capital, when to stop trading. You gotta know when to stop. So, and what I mean by that is, like, if the times you should stop trading is when you're feeling what is it called? Emotional. Anytime you feel emotional, stop trading and just go take care of your emotions, calm down, chill out, and get back in your logical. Take your money out of the market. Don't, if you put this amount of money in a trade and it's just too much, where before you even put the trade on, you're just emotional, put less money in. Always trade with a non-emotional amount. You trade it non-emotionally. Going, so now your logical brain is, because you have two sections of your brain, two hemispheres, whatever. One is emotional, one is logical. Make sure you're back in your logical brain. And anytime you get too emotional, you get lost, you feel emotion or something. Some people can get their loss, stay level-headed, and get their next trade. That's how you're going to be when you get to the top levels. But if you're not able to do that, if you take a loss and just take a pause on trading, just stop trading for a second, and just relax, just relax, really, because you don't want to blow your whole account being emotional. Because when you're emotional, it's harder to do math in a moment, and the math you have to do, you're competing against all these bots. You're doing math against bots, like bots. A robot does math like that. Like imagine you're doing math against a calculator. The calculator is calculating. So you want to be in calculator mode. You want to be a calculator. You want to sit there and calculate stuff like, all right, I'm doing that for this, to hit this risk, to hit my 100K account is going to come out there. Okay, I have $100. It's going to take 500 trades or whatever. It'll take 30 trades, 100 trades. You know, as I told you guys earlier, you know exactly how much trades it's going to take to hit your goals. Everything is calculative, and so that's when to stop trading, is when you feel emotional and when you lose. So now, when you lose, what you should do is you should have already put in risk 1% of your account to 3% or whatever risk you chose that fits the equity curve that grows up your account. You choose that, and if you take a loss, you're just looking for your next trade. It's no big deal. Like, it doesn't matter. Losses don't matter. Wins don't matter. All that matters is following your strategy and growing your equity curve over time. And that's because you're trading to make money. You're not trading to win a trade. You're not trading to lose a trade. You're trading to make money. That's the only thing I'm at trading. Am I following my equity curve that makes me money? Yeah, I took my trade with my risk to reward. Everything was set properly. It's 3-to-1, and I want to make money. Like, I'm here. I did everything correct. I'm trading to make money, and that's it. You hit your money goals. So yeah, when you lose, just look for your next trade logically. Don't try to make back what you lost on that last trade. This trade is naturally going to happen because you're trading for 3-to-1, so you're going to make back what you lose plus profit on your next trade. But don't go looking for revenge. Like, I got to jump right back in the market right this second. Even I don't see a setup, but I hope this goes. Once you start trading off of hope, don't take the trade, because hope is an emotion. So you're trading with your logical brain. You're trading with your emotional brain when you're trading with hope, because it's emotion. You want to trade with logic. You want to use the chart patterns that I teach you. You want to use all the stuff that I teach you. I teach you all logical things. You want to use the logical things that you guys learn to trade with, and trade with logic. That's it. Like, those 10 tips right here, that's 5 years of trading simplified. So that can cut down your journey. It takes traders 5 years to do it. You can cut your journey down to easily, like, really a month, bro. It really shouldn't take longer than a month, like, because I'm really giving. Most traders who do the 5 years, they don't want to give away the secrets because it took them so long to learn, and they don't want to teach. They just don't want to teach the secret. That's why it takes other traders so long. But I'm just giving away this. I'm giving away enough to cut you guys' journey down. So in the future, who knows what's gonna happen if enough people learn this. But hopefully, I don't get slack from some of the other top traders about this. But it really doesn't matter to me. I like to be a part of the community, but it's more important that, knowledge is shared instead of kept. Because keeping knowledge is like, I can die with all this knowledge, it's cool, but I really want my family in the future to be learning this. Like, I want, my grandkids and all of them to watch these videos, learn how to trade, start killing the markets. So I'm making all of this content and preparing it really for my future family and everyone like that. And you guys are a family too, because you guys are learning stuff that I'm sharing with my family, so it's cool. Let's see what the next question is, and you guys can still drop questions in the chat if you guys have more questions you want to answer. But I'm gonna move to the next question that I was asked. How to get a funded account. I made this page right here for you guys, where you guys can do stuff like get funded accounts. You can get the free signal group here on this page. The link is in the bio on TikTok, and links in the below for you guys. but you can get free signals. You can get the free signals, basically 1 to 2 signals a day. You get those signals, and you can grow an account at a fair speed. Paid signals, I give out 10 plus signals a day. So now you're growing your account way faster than you would on free, 5 times faster, 6 times faster. So you can grow account faster with the paid signals, and it's a little bit more bonuses with that. But then on top of that, you guys can get funded accounts. So you can get funded for $2 million on using this link right here to fund your account for $2 million. So let's say this week you don't have money, you don't have millions of dollars, but you want to make $60K a week. Instead of getting a leveraged account or using leverage, I would prefer you get a funded account, and it's still leverage and same rules apply, but you'll be able to make more money and actually cash it out. So you can get funded for 2.4 mil. You use both of these, sign up for both. In 1 to 3 days, you'll get funded for 2.4 mil. There's no credit checks, none of that, anything like that. You can get funded, and now you have a 2.5 mil account. And you can grow it. We grow accounts, 10% a week. If we do a 10% a week on 2.5 mil, you're getting 250K on an account. If you grow your account just 1% that week, you're making 25K. So if we hit 2 trades, just gain 2% gains, and you guys see the trades we did on the free signals, they're bigger than that. But those 2 little trades would have made you 50K this week. So you can make 50K a week easily. That's how traders make 50K a week, 60K a week. They're buying cars, buying houses and stuff. That's how they're able to do. The trading lifestyle is very lucrative once you understand the math and you know how to make it pay for itself. So I recommend that. Got to drink water. See what else we got. This is the leverage trading. 1000x leverage they give. So you get 1000x leverage, and you get the bonus on this one. This one's for a trade copier. So if you don't have much time to trade a big account or something, whatever, you can put your money in, deposit, take the same trades that I take on my account, and you can grow an account that way. It's a cool way to grow. Then we got risk management, and the risk management is where I go over the math. So if you go there, I have books, I've typed with the numbers. I made a cheat sheet for you guys, so you can use the cheat sheet to do the math simply, and you'll learn everything about risk management there. We got trading psychology for the mindset you need to have to be trading, chart pattern mastery, market cycle, how to grow a small account is good too. It'll teach you how to do the math also in that. Indicators, charts, YouTube channel and stuff. All right, so the risk management. It'll explain what a pip is. So if you guys don't know what a pip is, you can go over there and learn exactly what a pip is. But 1 pip equals 10 ticks. And a tick depends on your broker. So different brokers have different tick sizes. Sometimes a tick is 1 penny. Sometimes a tick is 10 cents. Sometimes it's $1. So you want to... a tick is each time the chart moves 1 click up and down. So you want to look at the chart, see how it's moving, and understand what a tick is. So now this goes into the next thing. Now you guys understand the tick. Let me know in the chat if you want me to explain it better. So now you know what a tick is.